think election results are just one event, okay, in terms of many events, okay, what we see while investing into equities. I think really when investors are looking at investing into equity from a longer term perspective, is the other fundamentals, okay, which are more important, which can drive and sustain the trend for the markets. So key thing to look out would be how the economy is doing, okay, which we believe that it has bottomed out, and you will see a slow gradual recovery, a cyclical recovery in the economy, irrespective of the election outcome. The election outcome can only shape the kind of the pace of recovery from these levels. Secondly, we've seen a lot of the macro factors like current account deficit, which has deteriorated last year, has improved significantly. The rupee is stable. Inflation, okay, which has been a big challenge in the last 3 years, 2 years, is easing off, and that should mean that interest rates, okay, which have kind of peaked out, there's a possibility of that coming up and down in the next 1 or 2 years. So given that, I think the earnings trajectory for corporate over the next 2-3 years should be pretty decent in double digits compared to single digit growth what we have seen in the last 3 years. And that's a good reason for investors to be putting money in equities from a longer term perspective. Earlier NFO trends that you saw a huge number of NFOs coming in 2007, 2006. That was on the back of a huge run in the equity markets we saw from 2003 to 2007. And it was at the kind of a peak of the market, okay, where a lot of retail interest was there. This time it is a bit different in the sense that we have seen these NFOs coming in where there is total lack of interest, disinterest from retail investors into equities. The markets are also at a kind of all-time low. The economy is also at a cyclical bottom. So I think while we have seen quite a number of closed-end NFO coming into the marketplace, the fact that the valuations are reasonable, the fact that there's still lack of, there's not huge euphoria, I think the returns of what people could make by investing at this point in time, some of the NFOs in the next 3 to 5 years could be much better. So the experience, I think, should be better than what investor had in the euphoric period. While NFOs is one route which creates a kind of interest and vibrancy in the market, I think clearly existing funds, okay, long-term fund which are doing well, I think that's where also the money would come in on a more sustainable basis.